Imperial, which has businesses in logistics, car rental, tourism, financial services, vehicle distribution, and retail.
Under CEO Mark Lamberti, it's basically divisionalized itself into two bits. One which has to do with vehicles, which they call Modus, which is vehicle sales and as well as vehicle import, and then the other which is logistics. So we're going to see that as an emerging trend with this
Market
company.
cap 33.5 billion rand, price to earnings ratio of 13 and dividend yield of 4.5%. Andrew, let's get the share price graph up just so that can set the scene for our discussion. It's going to come up in a moment. Your sense of Imperial, we've been waiting a long time, and repeatedly we say, for the Mark Lamberti factor to really translate into value.
Yeah, I suppose if you bought it rather beginning of last year, you would say the Mark Lamberti factor has played out, given it was 100 rand, and I think it's up near 160 or 170. I think it even went over 180 at one point. So I think he's doing a good job. You know, it's obviously the share price since he came in, when was it, 3-4 years ago now, has been sideways, has moved sideways. What I like about it, he's obviously, you know, a hell of a good manager, CEO of the business. He's been around for a hell of a long time, and he's aligned his interests with that of shareholders. So instead of taking a big fat salary, he's rather going to get remunerated in the long-term performance of the business. In other words, what the market cap does, he's put, I think, 100 million of his own money in. And when his contract comes up in 2019, I guess he'll get that back plus whatever he's done. So I really like that part of the Lamberti factor, as you talk about. I think the market's got to, I suppose, from a valuation perspective, a PE of 13, I think for a business like that, that's probably fairly valued. I don't think it's hell of cheap. You know, when it's on a single-digit PE, which it was not so long ago, then I think it starts to look interesting. It's a nice yield play. It pays dividend yield of about 4.5%, which is, I think, quite good. But yeah, so obviously it's, you know, it's in a tough space as we've spoken about.
Paul, let's talk about the breaking up of the business into two very distinct parts.
I don't have any clarity on that, but I think if the time were right, they may float that off. So they may do a formal separation. Then you'll have Motus, which is vehicle distribution, which is Kia and Hyundai, and then also the motor retail distribution business. That
but
can
there is
go
an
out.
informal separation of those assets.
From a reporting point of view, they're already
Motus.
breaking that down, which is normally a precursor to something. The logistics business, which we want to talk about here, is doing fine. European assets there are quite significant, and there they've got, you know,
Eastern Europe exposure.
Honey which is like a Rhine River transportation business where they move stuff up and down. So these are businesses they've bought. They've done quite a lot of infill acquisitions in Africa, and I think they'll continue to do those. So I guess that's just waiting for an economic rebound. But operationally anyway, they've got it all sorted and set up, and I think they're a good and preferred choice player in many of them.
But we are sitting at a 13 PE. Andrew, you were saying it looks attractive at a single-digit PE.
Yeah, I suppose we're also waiting for that unlock, as Paul said, you know, separating the two businesses out. What are they going to do with it? Wait and see what if the market
actually
actually realizes.
Do you think we are looking for here a potential formal separation of the? Is that what they're
Again,
preparing
there's
for?
no, you know, as Paul says, all indications are they might do that down the line. But I suppose they'll wait and see, you know, how this plays out. They've sold off non-core assets, so I think they're moving in the right direction.
And that's actually a point worth making. They've sold 11.5 billion rands worth of assets. You know, the Regent insurance business was sold. They're selling properties. So that has a big impact long-term on the capital efficiency of the business. And you've got to hand it to the team for pulling those things off.
We're going to go hot or not on Imperial, Paul?
You know, the backdrop is not all that favourable, either with regard to vehicle sales or with regard to just top-line economic growth. And yet the European thing, I don't know. What do you think?
I'm lukewarm on it. You know, as I say, from a valuation point of view, I don't think it's offering extreme value at this point. And then, you know, what's going to drive it, earnings, where the earnings are going to come from. You know, at this stage I'm lukewarm, so I'd probably say not hot.
Exactly, I'm translating your lukewarm into a not hot, and you are now going not hot.
Not hot, exactly.